Okay, so Todd, we're back.
Yep,
I'm
you got
yep.
walking out.
I think the hedge funds are trying to ban us from talking about this, man. They're trying to get us, but we got to band together. Ape strong? Is that what it is? I'm sorry. I'm not gonna laugh because it's really something's happening right now. So, like I was saying earlier before we started glitching, um, everybody's talking about this right now. Wall Street bets versus the hedge funds, and I tried to avoid it. I feel like everybody's calling me asking me what's happening next, and they wanted to know, and I'm like, I'm no financial advice, but I'm trying to say what I think is happening. But rather than me guessing, I thought let me ask somebody who has some more knowledge than I do. Um, Let me talk to somebody who's in the financial space. And before we get into the whole Wall Street bets, RobinHood, um, Doge Coin, AMC, GME, short squeeze, and all that good stuff. Todd, let me know who are you? Tell the people.
Yeah, my name's Todd. I've been in the finance industry for quite a few years now. I graduated with a finance degree many years ago from Penn State. First job out of college, I found myself on an equity desk up in New York City. Between 06 and 2010, I was trading that global financial crisis, enjoying all of that fun. I was one of those people shorting stocks during 2008, and I was doing quite well. Kind of like being a trader kind of makes you kind of I don't know, a little weird, I guess. And I kind of just quit my job, went to China, started teaching English. I was there for like 4 years before coming back. Then I came back, got hired as an asset manager here, and got my CFA, chartered financial analyst, and here we are. I mainly do like most of my like investment stuff in crypto space anymore. I fell in love with cryptos, and but I do know stocks quite well. Although I don't really trade stocks anymore. I'm not really allowed to like trade. Every time I make a stock trade, I have to like get cleared by my compliance department and 60-day holds. I don't like kind of having those type of restrictions, so I just kind of stay away from the stock market. But I do stay on top of what's happening in the world of the financial markets, just not individual stocks really.
Damn, so you couldn't even hop in to this
Nope.
wave of amazing, which is perfect actually, because now we're hearing from somebody who can see it from a distance and not get too emotional about it. Full disclaimer, he doesn't have any vested interest in this. I don't either. Not that I didn't want to, but I felt like there's other reasons that we'll discuss later as to why I didn't hop into this GME, AMC, Wall Street bets wave. But by the way, just also as a disclaimer, this is not financial advice. It's just our opinions right now. Just for entertainment purposes, and do not make any decisions based on what we say today or ever. Do your own research.
Tell people. That's what I tell people when they ask me for financial advice. Is like the first thing you should do is not listen to me.
Right. Like I'm trying to help you, but I'm not trying to be. You need to be responsible for yourself. Okay.
Exactly.
Yeah. So from what you saw, from your perspective as a financial product analyst, what happened with Wall Street bets and the hedge funds?
Well, my opinion is there's some like legitimate like traders that were involved in that Wall Street bets site. I never really went to the Reddit, so I don't really know what was being said, but obviously there's someone there who knows what they're doing, and they were positioned in GameStop when the word spread, and it was like the perfect storm. And you're talking about like a stock GameStop that was like the short ratio of it was there's more short than there was actually long, so it was like heavily short, and a lot of the shorting that was going on, it was like naked short selling, which is actually illegal, but it happens all the time. I don't know why they allow it to happen. Well, I do know why they allow it to happen. It's because the SEC only goes after small fish. They don't really go after like the big guys a lot of times. But yeah, as a lot of these stocks are like heavily short. And what naked shorting is when you're basically selling stock that you don't actually have custody of. When someone goes short sell, you're borrowing stock, and then you sell that stock with the idea that you'll buy it back at a lower price. And if it goes up, then you got to return it whatever price it is. So sometimes when the price goes up, like a different GameStop, that puts like someone who's short it puts them in like a disadvantage because they got to buy at that higher price, especially when the price is running away from them. And that's exactly what's happened to what was Melvin Capital there when they got kind of squeezed there.
Gotcha. So you're saying like, essentially, I'm saying to my friend, hey, let me borrow your toy that I know has, or at least doesn't have as much value in the future. I'm gonna pay you $10 for it, and I'm gonna put it on the market immediately and sell it for $10, knowing that it's gonna go down to 5, because for whatever reason, maybe I'm putting some stories out that make the toy sound terrible, and then once the story hits and everybody believes it and says those toys are not worth any money, I'll try to sell it for 5. I say, hold up, here's my 10. Take my $10. I might buy 2, or I just buy 1 to pay my guy back, and I capitalize on that by making $5. Right? That's a short.
Exactly. Except for GameStop, it is a weak company. Its business model has been a broken business model for some time now.
Mm-hmm.
I think it peaked in like the early, like the mid 2000s. And then with the whole COVID situation, with retail even being beat up even more, makes sense that a lot of people were short this company that was on its way to basically failing. So there was reasons why people were like heavy short this stock. The issues are is like some of these hedge funds were over leveraged in their shorts, and they're like I said, doing like naked short selling shares they didn't actually have custody of, and they're being allowed to do this.
Gotcha. So the naked short situation sounds like the nefarious part, right? Which makes it sound like they're evil, the evil people, and the WallStreetBets bunch of from the way the media is portraying it, they're like gamers. So they saw a competition here where they could win, and they essentially tried to band together, ape strong. Let's go to the moon by squeezing them. I'm using terminology that I've seen online, which is funny because this terminology seems very familiar, and we'll get into that later as to why everything that's being done on WallStreetBets sounds so much like 2017. Right? The meme culture is strong in this one. But yeah, they're essentially banding together and doing something that they can see the bad guys doing, right? Do you think they really did anything different than what the hedge funds did?
Well, I'm going to defend the bad guys here because like sometimes like short sellers do a good thing. There are companies out there that are lying. They mislead people on their books, and yet the short sellers are the ones who are like kind of looking through the books and realizing like, wait a minute, there's a lot of shenanigans going on. So the short sellers are usually the first people to kind of like raise red flags. I remember during like the Lehman crisis, some of the people shorting Lehman, they were shorting it months and months before people even knew there's any problems with Lehman, and they kept on pounding the tables. Like their books are like they don't have the money on these books, and all their assets are worthless. Yet their valuation is like so high, so they kept on shorting it. I look at that and they're doing the right thing. They're looking at like there's problems with these companies, and they're just trying to they're going to make money off it, but they're also raising awareness to issues that are arising from companies. I mean, I bring up Lehman just because that's a big moment in my life, but like go back to the early 2000s with like Enron, or Enron was doing all kinds of shady stuff with like electricity, or like what was her name? What was it, Thanos or something like that, with the pharmaceutical, or with the pharmaceutical company that was trying to make those like blood tests, where it was like she was like completely lying about like what the blood test was going on. I mean, there are companies out there that are quite bad. So it's not necessarily a bad thing to be short some of these companies. But sometimes what happens though is like people are just trying to drive markets. They're trying to like manipulate markets. That's where like I think the WallStreetBets guys are trying to take advantage of some of these short sellers and say GameStop who are trying to manipulate the market. But not all short sellers are trying to manipulate the market though. They're just trying to take advantage of, they see a situation where a company is way overvalued. There's a lot of problems with the company, and they just want to make money off that.
Terrible connection. I guess.
Yeah, you're like frozen for me here.
All right. So yeah, I think you're giving too much good information, man. They're trying to cut us out. I swear every time you say something great, they cut the video. But yeah, so what you're saying to me then is that this isn't anything new. So the media is pushing this as if it's never been done before. Like it's not anything that before you go into the telling me why it's not new. You're on the side of the short seller because it makes sense for the market to have the option to it prove that bad companies are out there and they need to be less their value on the market needs to be back to what it makes sense, like, right?
Cynics in a market are great. Like, everyone wants to be, want to FOMO in. They want everything to go to the moon. But you know what? There's a reason why you have valuations for companies. And it's good to have cynics who are looking into reasons why you don't want to own a company and why you may want to sell a company. It makes for a healthier market. Wherever you see markets where short selling is like banned, it always has more volatility in the markets, and it causes much larger swings and a lot more headaches for the people who are actually trying to be, participants of those markets.
Makes sense. I mean, you need a buyer and a seller, right? That's the way you create a market. So it's nothing wrong with somebody being in the market shorting it. If you think it's better, prove it. Put your money where your mouth is, right?
Exactly.
But when they naked short and not have the stock to sell you or buy back, like it just creates another problem,
Well, that's
right?
manipulation. That's just manipulation right there. So,
Do you look at what WallStreetBets did as banding together as manipulation?
not necessarily. Well, maybe, I really don't know.
Right.
That whole situation, I think, is a little unique with how they were able to gather a whole bunch of retail traders to force a short squeeze. Usually, like, it's like, big players themselves see someone out there, and they're the ones who do that, try to force a short squeeze themselves. But I was just seeing today, this one hedge fund called Melvin Capital, just on AMC and GameStop, they made over $200 million themselves.
200 million.
So this is a hedge fund themselves, like, benefiting from all of this.
Right. So even though, I mean, I think they did a great job figuring out a way to band together, and that might be the new part of it, right? The new wave or platform that they use to band together is different. People have banded together before, but this thing went viral. And one thing I want to mention is that it didn't start last week. It didn't start the week before. It didn't even start in January. This thing seemed to have started, like, if you really go back to the guy investing, the main guy, deep effing value, is that what it's called? He probably was in it for a year now and trying to chant this, and it just happened that they seem to have naked shorted the stock by not having enough compared to how much, they betting more against it than there is stock to bet against, right?
Yep.
So that's probably the spark that kicked it off and proved to people that, yeah, you need to band together and stop this bad hedge fund from doing things to a company that, reminds you of your childhood. Right? Yeah, it's a game.
Yep.
It's all a game. But
it is just a game.
all the memes make me feel like I'm watching it. It feels so much like I'm like back in 2017 again, and I'm enjoying it, and I want to participate, but I also understand that hedge funds are out there making $200 million off of this, right? So there was a couple questions I wanted to make sure we hit, right? Like, it's is WallStreetBets hurting or winning? Like, at this point, what I mean? It's been a week. They banded together. Where is it now? Where are we now? What do you think is, like, inevitable, or give me your thoughts on the end result of this.
The small group that probably started it all, they probably made out like bandits. But all the people who've kind of piled in, I feel really bad for them, because I think a lot of people are going to lose a lot of money just because they're FOMOing in, trying to, like, chase that move, and they're going to try to believe in something that reality. It's not every stock is shorted the same way GameStop was short. Just because there's a lot of short in a stock doesn't necessarily mean you're going to be able to squeeze a player. Not every and like all this did is raise awareness to other hedge funds that are short to make sure they're not overexposed to any one position. I know they were trying to do silver this week, and it seemed to kind of like fizzled out. I mean, the silver market's like you're dealing with some pretty major banks that are, shorting that market. So that's a lot more difficult than a relatively small player. I think Melvin was only around like $9 billion. I know it sounds big, but in the whole scheme of things, it's actually a relatively small player in the whole financial market. You talk about trillions of dollars in the market, so like a $9 billion player is relatively small. Whereas these like large banks that are short silver, they have a lot more capital and they have access to central banks that can just, control P, give them more money.
Yeah. And it does seem like, a couple players got taken down for sure. So you could say WallStreetBet won the battle. But I don't know if they're going to win the war because of the media is making people come into this just watching it and thinking the price is going up. They're not seeing really the whole picture. They are trying to band together. I get that. I love that. I love the camaraderie. But when you're not seeing how much people might be on WallStreetBets coercing you to go bring the price up, like you're on the internet.
Yep.
It's like playing a video game that you just found and you say you want to go online and play it. You might want to play the campaign mode first and figure this thing out and not just stare at the game thinking, I'm great, I can figure this out right away. You need some experience before you jump online and play with everybody else. So, I want to say that. I just got unmuted. Kind of weird. I'm telling you, man, they trying to stop us from talking, man. They trying to stop us from talking about this right now. But yeah, I just think it's one of those things you got to have time in the market so you can understand the plays, because timing the market is not going to beat time in the market, if that makes sense. Hopefully people got that. But anyway, one of the things that happened though, the RobinHood shut down. Oh, by the way, shout out to Dante for shouting out Doge Coin in here, because apparently, that happened. What was that, like the next day or 2 days later, Dogecoin pumped?
Yeah, that was incredible. I couldn't help but just laugh at that.
Right. We'll get into that in a short time, but we got to talk about what happened with RobinHood, because people were, upset, to say the least. What exactly do you think happened with RobinHood? Why did they shut down?
I'm not 100% sure. I have some thoughts. So like when you trade on exchange, you do trade in like 100 share lots. So when you go to say like a Robinhood or just like any kind of broker that you have, you buy say like 10, 15 shares, you're actually buying like a fraction of a lot. And so what a lot of times brokers will do is like they understand like small retail investors, they can't afford 100 shares of a lot, like Amazon. 100 shares of Amazon is, well, that's a lot of money for a lot of people. So you can buy like fractional shares, or even just like fractional lots, but like you kind of got a front. So you're actually like having some kind of you're taking on liability sometimes doing that. And I'm guessing what has happened was like so many people like FOMO'd in and trying to buy up all the GameStop. They just didn't have like the actual stock available to actually sell them. And of course they have their own custodian with like Citadel, for example. They'd be using them as like their supplier of this stock, but even Citadel probably was running out of actual stock to actually set or to just allow people to buy. That is my guess is what is happening, and it kind of like created a kind of liquidity crisis within Robinhood itself. And then you had the added effect when they were curbing the trading, people just started pulling their money out, which probably just made the problem even worse. And that's why Robinhood's been trying to like raise money, billions of dollars over the last few days. That's just my guess. I really don't know the real reason for it, but I'm just guessing that's probably the reasoning why.
No, that totally makes sense, because literally there's not like infinite number of GameStop shares out there, right? And you can't just go pull it from anywhere. Another broker isn't going to say, like TD Ameritrade is not going to say, hey, Robinhood, take my money. take my stocks. You can sell them for me. They're
Yeah,
going to hold on to. They want to make their own money. So
exactly.
yeah.
And if like Robinhood is just fronting you the shares, and they think they can pick it up somewhere else, and then they're realizing they're fronting you the shares, say like $200, they can only get it at like 250.
Mm-hmm.
They're taking a loss. I really don't know if that's what happened. I'm just just hypothesizing here.
Yeah, no, it totally makes sense. I actually listened to the guy. What was his name? The CEO of Robinhood. I listened to him on CNBC try to say something. I swear to God, he needs a PR person. And then I listened to him on Clubhouse. Elon brought him on Clubhouse late at night. Um, Zion, shout out to you for asking this question. I'm gonna get to it real quick. In a second. But yeah, he was like not great on CNBC. Didn't explain anything. But then on Robinhood, he explained the exact same thing you said. Your guess is actually correct. He did get a call at 3 a.m., he says, saying that they have a couple $1 billion that they have to potentially fill in orders. And either they come up with that money, which they obviously didn't have from the way he's talking, or they shut down trades. So what they did was they choose to shut it down. They let you sell because you already have it. So they filled that. But whatever new orders that came in from the bunch of new people that decided they want to dive into GameStop, they couldn't fill. So they were like, all right, no, shut this down. And then over time, the order quantity went down. So they were like, all right, we'll open trades again later now that we can handle the new lower amount of people that are in. So all said and done, like now it's like people are just like, I don't like you, Robin, for shutting it down, but they don't. It just looks shady for you to shut down, especially when you're funded by Citadel, who also is possibly allegedly shorting the stock as well. But so Zion's saying, what do we think about the future of Robinhood? What's your
Well,
thought?
you just said it best. They need like a better PR about that. I mean, actually, if they're just straight up honest, I think the backlash would not have been as bad. But sometimes, like not being honest straight away, led people to think, well, this is them trying to stop us. I really don't know what's going to happen to Robinhood. I think if they can get through this, they'll be okay. But it might take a few months of heartaches, and they might need to get quite a bit of capital like infused into the platform. But I can see them surviving. I don't know, like I don't really hang out with those like kind of those type of apps. If I was like going to be trading in that world, I'd be using Interactive Brokers, which is more for like it's a little bit more sophisticated software, I guess. But I don't know what would be like comparable to Robinhood that's out there.
Mm-hmm.
I don't know. Maybe you guys would know better than I would. I don't really look in that space that often.
Yeah, it's from what I've seen, like Webull, people like jumped on Webull around the time when everybody started investing. It's pretty much as easy as Robinhood, but I like you. I don't think they're gonna disappear. I don't see anything better on the market that's gonna be like revolutionary. So
Yeah,
give it a couple months,
yeah.
people
The
aren't
private
gonna.
feedback quarters, and they'll probably be back there.
Yeah,
I'm guessing. I really don't know.
yeah. You don't need this. You're big time in the financial game. If you needed to buy something, there's no need for this app. You already got the tools. Which brings me
Yeah.
right into a question about that. Since you are, in the financial space, analyzing these things, and unfortunately not able to participate because of you being in the financial space. Um, what are some of the things that these hedge funds have that are allowing them to be ahead of the game? Like I realized that the newbie doesn't have all the tools, and maybe the hedge funds have an advantage here, or do they have an advantage?
Well, basically, I think their advantage is just have money. They can afford tools.
True,
Like
true.
for example, like a Bloomberg terminal, it's not cheap. Like the terminal, like the data sources I use at work. I mean, I wouldn't have it on my own. I mean, like some of the licenses are like $10,000 like a year, or sometimes like $25,000 a year, just to have a license to some data. And you got even more data turned on, you got to like pay even more money. And like these services like Bloomberg, FactSet, Morningstar, they know what's up, and especially when you work for a big company, they just overcharge, and because data is important, it's valuable, and so that's kind of where the hedge funds kind of have that advantage. They just have access to a lot more data than say like a retail investor would. He just has a few $1,000s and say like a Robinhood account.
Gotcha. Apparently, my signal went out.
Yeah, I'm just seeing a black screen here.
Yeah, I'm telling you, they're trying to trap me. They're trying to get me out of the game. That's all. My only excuse is that it's not my fault. It's the hedge funds. See, they keep doing it. They keep trying to. I'm gonna
Well, you
switch.
just blamed the hedge funds there, so that's why.
Yeah, I keep blaming them, and they keep cutting my signal to not let me get the truth out to you guys. So I'm probably gonna have to switch my camera feed because life and the pursuit of happiness. Let me do that. Boom. Terrible camera feed. How you like that? Anyway, back to the scheduled program. So let's get into this thing. Look, Robinhood shut down, came back up, but in the midst of all that, people might have pivoted a little bit to the cryptocurrency market. Do you think the cryptocurrency market offers people any better solutions to this problem?
I mean, I am biased. Ever since I bought my first Bitcoin back in like July 2017, I've just been absolutely obsessed with the crypto world. It kind of like I got very jaded about traditional financial markets back during the global financial crisis. It's one of the reasons why I think I just like quit and moved to China for 4 years. Um, so I was kind of like realizing like our traditional financial system, it's broken, it's stuck in like the 20th century. And then what they did to try to solve the problem of the housing crisis by just creating quantitative easing pretty much broke a lot of like how the system kind of works. And so I was kind of like looking for something kind of like new to kind of replace that system. And crypto was like staring me in the face. I've been aware of Bitcoin probably for like years, just like I was always dismissive of it until I finally just threw $500 at it. And then I became like realized like how amazing it is. And I realized that our traditional financial world, it's going to like either evolve or just be replaced by like the crypto financial world. It's probably going to evolve into it. That's just how usually things work. But I just see like so much potential in the crypto space that I mean, like right now I can do margin trading in crypto. I can just like put up my ether, lock it in like a maker contract, and then generate DAI to take that DAI and then like do more trading with it. I mean, that's all done decentralized. The same thing where like people can go get do a margin account on. I imagine you can do margin on Robinhood. So I imagine people are doing margin on Robinhood. Well, I can just do that decentralized with no centralized authority. No one's telling me I can't make any more trades. The only one who's doing that is if like the market goes down so much and I get liquidated. But that's on me, and I gotta watch how much leverage I take. But just those little things that are already evolving in the space, it's just so fascinating.
Gotcha. So there's literally like instead of there being a CEO to say stop trading, and you're in the crypto market right now, it's literally your fault if stuff breaks because the system's just gonna run 24/7.
Well, smart contract. It's a smart contract that's telling me I can't trade anymore. Basically, like smart contract says, you borrowed this much. This is the collateral you have on, and we're doing a margin call because the price of your asset has gone down so much and what you have borrowed against it. But it's the same thing that happens like if you borrow from a bank and the asset goes down so much, or like you can't pay back the bank. They're going to take your assets from you. But it just now instead of like a third party, it's just done with a smart contract basically.
Gotcha. No emotions in there, just straight facts. So when the Dogecoin thing came up, I'm assuming they were trying to avoid some things that happen in the Robinhood space, and I'm hoping that, and I'm hoping it's not anything malicious and people just wanted to pump Dogecoin. Did you bother to jump in, or you just decided that that's not even worth my time?
I think it's because when I came into the crypto space, like I think Dogecoin is like a little bit older than like when I got into it. Like people, I think you said you got in around 2014. So like Dogecoin's a little bit older, and like so when I got in 2017, everyone's like, "Oh, Dogecoin's a joke," so I just never bothered with it. And then when it mooned the other day, I saw it after it already mooned, and I just thought it was like funny. I wasn't going to jump into that.
Yeah, mooned. For people who don't know, when somebody says the stock or crypto mooned, it means the chart just went up, just went straight skyrocketed to the moon. Which is something that the Wall Street Bets people are talking about, even when it comes to stocks, which is so 2017. It's just all 2017 all over again, except Wall Street Bets is running the moves, and people are like, jumping in like usual, FOMOing in. It's fear of missing out. So I'm gonna try to pull up Dogecoin right now because I got a lot of people that reached out to me about Dogecoin, and let me see if I can bring this thing up and probably share my screen and makes people understand why I think Dogecoin is a joke, because that's really what it came out as, a joke. First off, that thing is crazy. I'm sorry, my screen's off to the side, so I gotta look at that parabolic moonshot right there, as they would call it on Wall Street Bets. And then this crazy correction, right? Most people called me when this thing was like, I don't know, 6-7 cents. And then, it was what? I think last month, not even last month, maybe mid January. Yeah, a couple weeks ago. It was like under a penny. And it was already jumping, it was already popping, right? So I was like, okay, we can see some interesting growth rise in Dogecoin's price. But I still was staying away. But when it hit 5, I was like, wait a minute, what's going on? Then I found out that Wall Street Bets people are pumping it. And then Elon Musk is like, doing his thing like he normally tries to do, gets in on the game. But I'm like, there's no way I'm getting in late. I've learned my lesson from 2017. If it's already in motion, just let it go. How you feel about that when you see things already rising up? Do you have a FOMO moment where you fear missing out on it?
I'm not gonna lie, I've definitely FOMO'd in stuff before. But there's a saying that says, like, when everyone is yelling, you should be selling. When everyone is crying, you should be buying.
Ooh, I like that one. Sounds familiar. Like, when everybody's greedy, you should be fearful. When everybody's fearful, you should be greedy. Sounds like, I think that was Warren Buffett famous saying.
Yep.
Yeah, it's definitely a thing. And one of the main reasons I didn't bother to dive in, even though I saw, a couple, if I was into day trading, it would have been a nice play if I saw it at 5, jump to 8 cents. I mean, okay, cool. But I'm not awake 24/7, and I don't like staring at stuff. So
yeah, you gotta be like on top of it, right?
Super on top of it, because basically the next day this thing dropped. Okay. One of the biggest factors is this coins that they have available. Let me try to bring it up right here. They got a circulating supply of Doge Coin. Now Bitcoin's 21 million. That's way too many Doge coins for me. I get it. You might think it want to go to $1, but that's high circulating supply. Okay.
That was like a big thing that was going on. I remember back in like 2017, like a lot of these like ICO projects would have this like massive supply. And so like they're trying to get people in to buy, like, oh, it's 2 cents. So they're thinking it goes from 2 cents to like $100. When in reality, like 2 cents is already way overvalued.
Right.
Now it's like the opposite that's happening. Now you have these projects coming out with like very small supplies of maybe like 50,000 tokens that, like, because the supply is so small, you can push the price up to thousands of dollars.
Yeah, you got to look into these projects. Some of them are a joke, specifically like Dogecoin. So when people come to me with the idea of saying they're going to invest in something, I have to ask them the question of if they tried to check out the stats on the coin or tokenomics, or if it's a stock, check it out. Check out the company. You know what I'm saying? So this is one tool. If anybody's wondering, it's coinmarketcap.com. There's CoinGecko. Some people trust that better, but go to these sites and use them for what they are for, and check out the information on the coin to determine if it's valuable to you.
I actually use both CoinGecko and CoinMarketCap interchangeably. I think they both provide solid information.
Yeah, I'm gonna post it in the comments just in case somebody's looking for it. Coinmarketcap.com. And no max supply. That means there's more being made.
Yeah.
Like you're diluting it. You might as well stay in cash.
It's an infinite coin.
Yeah, it's an infinite coin. Whereas, just for reference, if we go back to the main site and then click on the number 1 coin, which is not this one, which is funny.
It's a joke.
I know. Yeah, when you click on it, they tell you it's a joke, which is hilarious. The 0 coin is they've made it to the top. I love it. I love that Wall Street Bets made it to the top. But Bitcoin, right? Just as a reference, I'm not telling you to go buy any Bitcoin. If you want to, feel free. But when you look at this, there's only a little over 18 million supply circulating right now. Some of which is allegedly lost forever. Like that guy that lost what? I don't know how many Bitcoin, but it's about a couple
I think
hundred
it was about
million.
7,000. He had 7,000 bitcoins.
Ooh, 7,000 Bitcoin lost in a dump somewhere because he threw away his laptop. Every 4 years we talk about that guy. The circulating the max supply ever going to be available is 21 million, right? So when you look at it, this should be more valuable because I'm hearing that there's like 48 millionaires in the world. They can't even get one if they all got, tried to get one.
Yep.
So, and people are hoarding it. People are buying. The guy just lost what? 70,000. Like, that's too many. 700 or whatever. Yeah. So just off of that factor, you should understand that supply and demand is going to cause the price to go up. Whatever you think that price is going to be.
Yeah, didn't like Satoshi Nakamoto like mine like a million just himself that's never moved?
On top of that, people seem to still send that a wallet, the Bitcoin wallet, a tip. Like they're just happy to send Bitcoin towards that wallet to say thank you, Satoshi. So it's locked away forever. And as long as Satoshi never appears out of nowhere and empty that wallet, a lot more Bitcoin's gone. But that's just me telling you how to, compare coins, just like you should compare stocks and figure them out if they're viable. That we don't want to have people go in just blind. So that's why we kind of tell people this is not financial advice. Do your own research. And if you feel like you can make some money, feel free. I'm not against day trading. I just don't do it myself because I just don't have the time.
Yeah, I think researching is very important. Like when I look at a project, I look at multiple things. What you did right there, Coin Market Cap, I go there. I look at the supply. What's the circulating supply? What's the total supply? Then you try to look through the white paper, see like how are the tokens distributed? Are like the creators of the tokens, are they like hoarding most of the tokens, or most of it going to be distributed to the community? I try to check out like the Telegram board, see kind of like try to get a feel of the community. How responsive are like the admins? Like how responsive, like how close do the developers stay to like the roadmaps? All kinds of different little things you want to look at. I mean, every project's different. There's different little nuances, and I mean it's easier said than done. But like always do your research. There's a lot of scams out there, and it's easy to like see like millions of dollars and then rush right into a scam just to run into like for example, this weekend a GameStop.finance token popped up, just clearly trying to like take advantage of the whole GameStop in the news constantly, trying to rug pull some people into buying some GameStop tokens which aren't even real.
Man, as long as these things keep going up in price, scammers will appear. So
exactly.
You gotta be diligent, and if you're gonna put money in, put a little bit in and figure it out. Don't go with your whole investment in. Like when people ask me if they should go into Bitcoin, I say sure, but just don't put in more than you're willing to lose. And if whatever you think you're willing to lose, cut that in like 4, and then put that in first, and then figure it out.
Yeah, I always suggest build a position. Like don't go all in at once and don't go all out at once. Like when it starts going up, you don't have to sell all out at once either. Start taking pieces. Like it spikes up, sell some. If it goes down, at least you got some profit. It keeps on going up, you sell some more. That way you keep on building as it goes up. So you sell as the move goes up, and then you buy as it goes down. Just I mean, again, it's easier said than done.
Yeah.
I do have a lot of experience with this, but like you going all in and going all out, it's a lot more difficult than just going in pieces.
Time in the market, man. You got time in the market. That's why you're here talking to me. And I wish I knew you back in like 2013 when I got in. You'd have probably saved me from doing some dumb things. And 2017, that would help me more.
Well, when I started trading, like my boss, who's like kind of training, like I was like part of a class of like 40 people, and my boss was just like, we don't really expect you guys to make any money in the first year. We actually kind of expect you to lose money. That's why they give us a low buying power, and then as you start making money, they increase your buying power, so you get more money to throw at the markets. But yeah, you learn more from like your mistakes than you do from your successes. Actually, sometimes you make money and you could be doing the wrong thing, you just luck out. But when you're making the mistakes and keep on losing money, you learn from that, so you don't repeat those same mistakes.
Makes sense. So if somebody wanted to learn, even if it's not really crypto, so they want to just learn about trading, what do you suggest they do? Books, movies, anything? Big Short? I
Well,
don't know.
I think the book Reminiscence of a Stock Operator is hands down like the best thing someone should do to read. I mean, when you're getting into it, it was written in like 1923. And it's basically from the first person perspective of a guy named Jesse Livermore, who's like a very real person. He's kind of talking about him trading, from like the early 1900s into 19 teens. And he talks about how he went bust multiple times, but like the psychology around like investing and trading and like the what is involved about it. And like he talks about going to like cigar rooms and then listening to people talk about the markets and realize you should never listen to anybody like who are talking about rumors, because rumors tend to be like, people spread rumors so they can sell to you, right? So like I think that's a great book. It's not a very technical book. It's just basically it's more of a narrative. So it's a fun read. And I think it helps like kind of get an understanding of like the psychology that's involved with someone who is in trading. And Jesse Livermore, you look him up, he was considered one of the greatest traders in the world at the time. He after the 1929 crash, he was short the 1929 crash. He became like one of the richest people in the world. He was just like a brilliant trader. His life ended tragically, but he was a great trader, and I think Reminiscence of a Stock Operator is a great book to go. Another good book. I know this guy is a very polarizing character or person, I should say. It's called Alchemy of Finance by George Soros. George Soros is another fascinating trader. I mean, you're talking about a guy who broke the Bank of England. I mean, how many people can go up to the Bank of England and win? And George Soros did that. So you're talking about these WallStreetBets guys who feel like they went to war against, these hedge funds, but really they took down a few people. George Soros went up against the Bank of England and broke the Bank of England, which is amazing.
Right. Oh man, yeah, those stories. It never ends, right? There's always a different form of it happening, and learning about it now and getting some time in the market is going to make each one of us even stronger. So that's really why I'm doing these. I'm trying to talk to people who have some time in the market and have some knowledge that I don't have. So, and sharing it, and hopefully we can get better and figure out easier ways to trade, man. Because there's a lot of money out there, and it's also depleting if you hold on to it. So you got to figure out a way to make your money work for you. And I'm doing it, so hopefully people do it too. But you got to figure out your way of doing it and get it done. Look, Todd, you gave us so much info. I think we cut out like 4 or 5 times, man. Even while you were talking about that book that people need to go get, I'm gonna grab my copy. We cut out, and you were still going, which is fine. We're gonna have to do this again. I feel like you have some more insight on like stuff that we could expand on. So hopefully you got some time and we can schedule something and go into detail on a little bit more things. But until then, my guy, peace.
Yeah, have a good one, man. Thanks. I appreciate you having me on.
You too.
All right.